says live discussion right there in the bottom right of your screen. Click on that, click on questions, and you can ask one. Um, you can also do it if you enter full screen with the blue button. It'll show right on the right-hand side. So make sure you ask your questions at any point during this conversation so we can get to them. So with that, I'd love to just go around and hear some thoughts on how we can use AI to really kind of turbocharge what we're capable of doing in the industry, unlock not just faster processes, better decisions, maybe unearth some things we didn't realize were affecting us or could affect us, getting ahead of it so we can be more proactive in our operations and our outcomes. Dan, if I could start with you, if you don't mind, here's some thoughts to start things off.
Yeah, certainly. I think, look, there's a ton of opportunity in the industry and in kind of the functions in which we operate to apply AI and machine learning. I think it's one of those areas where there's unlimited opportunity, but the challenges sometimes of actually getting it up and running, and then just even this to kind of maintaining and operating, and how do you eat this elephant one bite at a time, becomes kind of the challenge. One of the ways that we're applying it or have been applying it is really in our claims space, and it's for us probably the kind of earliest place and where we had the most traction out of the gate, and it's really around one, helping us to identify things that are in our book that we maybe didn't see. So potentially looking at in work comp space, where do we have better providers? How do we maybe predict severity and identify the right path to take, either a handler or a course of action path? But also have spent a lot of time building out our straight through processing capabilities for some of our tier one claims, right? So think about contents claims for renters and things like that. I think when we all started it, we thought it would be really quite easy, and you almost forget how much actually work you do behind the scenes in your own mind when you look at a claim and coverage, and so just building out all those different capabilities to identify the claim and be able to understand what's in the claim and be able to do the processing around that has been really one of the bigger successes and challenges for us, and it's taken longer than we anticipated. And the challenge then is, how do you deploy it, right? So we had all these standalone models that were, on our claim professionals' desks, but they weren't necessarily embedded or deployed in kind of a central way, and so needed to find ways to kind of bring that to life a little bit. And I know that's some of the stuff that we've done with ModelOp as well, but that's just one of the areas where we've seen success and some of the challenges that we see as we go forward from there.
Yeah, I'm glad that you pointed out that it can seem like you hear the word just. We can just automate it. We can just do this. And to me, that's always like red flag. Watch what you're going to hear next because they're oversimplifying it. It is
Yes,
tough. And the
yes,
implementation and the change management and all that. There's a lot of upside to it, but it's real
definitely.
effort. Yeah. So Stu, I feel like Dan sort of by mentioning ModelOp paved the way for you to come next. So what are some of your thoughts as you look across carriers, across situations that people face?
Yeah, no, it's a really exciting time, Brian, and yeah, QBE and ModelOp actually just released a case study on how we helped implement the straight through claim processing. So I think we're getting to the point where there's a lot of examples of what to do right, but as Dan mentioned, the challenges are how to operate things. There's most of across the industry, we've seen in both financial services and insurance over, say, the last 3 or 4 years, a real investment in building models with historical data piles and a real understanding of how AI can impact, the straight through claims processing type initiatives or underwriting or pricing now we see is kind of opening up. But there's really two halves to the AI initiatives. There's the building of models, which is still a very business function process, and there's a lot of exciting algorithms now, acquisition of data scientists to help really make an automated decisioning asset, but that asset is the model itself. And so thinking of that as an enterprise asset is what we've seen across both financial services and insurance, is really a kind of a newer trend, right? Typically the model sits in the business unit. Now the model is making the decisions, which means it's bearing enterprise risk, right? Brand risk and operational risk and financial risk, They're not just data science assets, they're business assets, and they have to integrate with so many different systems if you're going to actually automate it all the way through. And I think that was an exciting partnership with QBE to be able to really do full straight through claims processing, where you could triage this claim can be automated and go through the automated, and this really can't. Maybe it's potentially fraudulent. We have to go here and there and the other thing. So the maturity now in across the industry in 2021 is quite different than where it was even a couple of years ago. But the recognition that there's the building and the operating, and there's really one is a business unit function, one's an enterprise pattern. I think that's becoming more clear to the market in general.
Yeah, it's not just to create the thing. That's not good enough. Chuck it over the fence and it's done. Rachel, speaking of creating things and putting kind of enterprise tools in place, I mean, this is sort of the world that you live in, and making sure that they're valuable and working and all that. So I'd love to hear some of your perspective from AXA XL.
Yeah, and I want to add a little bit of context too, and then layer in something I don't think we heard or have talked about a lot, which I think is a really good topic. So AXA XL, as you know, kind of writes at the top end of large commercial and specialty risk, right? We write risk globally. So our business by its very nature is really complex, very bespoke, and very unique. And you can certainly make the case that yes, it could be less unique and less bespoke. And that's some of the things that, we're looking at as part of our transformation that we've been going through post AXA acquisition. Getting to the AI space, right? AI is an enormous domain. And so where we've been kind of focusing on, I know QBE's talked about the claims process. We look at it, from a kind of a risk segmentation and, pre-bind and post-bind processing. Like, where can we use AI, machine learning, natural language processing, all those types of techniques to help streamline what is a really, really complex process. So for example, if we're underwriting a large multinational insurance company, right, and it has 1,000 locations, you may be getting documents from all of those locations, right? And you want to be able to, sort through them and get the information that you need so that you can more effectively and quickly make that risk decision and determine whether it's in your appetite, right? So then you can get back to the client quickly with yes, no, this is in our space, or if yes, let's do that quickly, and we have a good idea of what exposures are in our portfolio. So AI is a really good enabler of that. But I think the one topic that we haven't really touched on is the expense of that, right, and the value of it, and coming up with a strong business case relative to what the opportunity is, because there's a huge investment there, as you guys mentioned, not only with I built the algorithm, I've got a data scientist, that's fine, but there's so many integration things that you have to think about. Where is this going to be embedded? How are we going to maintain it? And there's a cost, there's a people cost and a technology cost associated with that.
Yeah, and I'm sure we're going to get into this more. Yeah, Stu, did you want to jump in on that?
Yeah, I just wanted to really highlight something that Rachel said, which we found is really important learning in larger organizations. We've been exclusively focused on kind of the very large, diversified kind of enterprises. And what is a model? That simple question, actually, there's often especially in the earlier parts of the AI initiatives journeys, some confusion around that. And I think Rachel really highlighted an important thing. Models are not just neural nets. They're not just the latest machine learning technique and some weights and coefficients. There are a very broad number of models, even in the most modern kind of AI sense. Natural language processing, all sorts of different techniques. And many of them, in fact, in our experience, most of them in the large enterprise are what we classify as small data models, not big data models. They're really built with a historical pile of data that is very curated to the particular business problem in which the modeling effort is focused. And so that means that it's a challenge to think of these very diversified assets as an actual enterprise asset with enterprise patterns that have to be integrated into enterprise systems, right? So how to take this kind of large class of different models and operate them appropriately. And so the ModelOps capability in general. We have a platform for automating and making a model inventory with ModelOps Center, but in general, that ModelOps space, there's just a lot of activity around that to highlight everything that has to happen with a model. And one test is, can you take a risk person, look at an inventory, and they say, oh yeah, that has all the things that we think of a model as. And then you take a data scientist and you say, oh yes, that's what we think a model is. And then you take the business person and go, look, they're actually making the decisions that humans would have made. That's a model from our point of view. So the diversity of models and the complexity of models within the enterprise kind of become a challenge that needs to be addressed for the full value of investment in AI to be unlocked downstream. And so this is a really important point I wanted to highlight from Rachel.
Yeah, it can certainly drive a lot of cost if you don't get that right. It's a slightly different world, but in RPA, there's organizations that, oh, we'll build a robot for that. And next thing they know, there's like, 1,000+ robots out there. And then Windows password credential updates hits, and they didn't think about each one of those bots needs new credentials. And so it was a very large financial services company that in a day, the 2 people that they had building out all these robots suddenly were scrambling to get new credentials for like 1,200 bots as their ops ground to a halt. And they did it, but they're like, oh, not something we realized ahead of time. And there's so many, and we weren't really, packaging them up and managing them as in their entirety to head this off in the past. Obviously, there are new tools today that can change that. This is going back a few years, but
yeah, and I think it highlights, I think Dan would probably agree, I don't want to put words in his mouth, but it highlights the challenge of where does in the organization does a model ops capability live? If it's not in a particular business unit, is it in technology? Is it in risk? Is it operational? It's an operational issue. So, that's just a question to ask. Who is ultimately responsible for governance of models and their ultimate operational capability? I think that becomes we've seen that become an emergent question in the large insurance industry and broader.
Yeah.
But I think even before you get there, you have to think about, governance of experiments too. Because the AI space is so huge and there's so many areas where you can look to apply it, that you have lots of people in the organization trying to identify what those use cases are, right? And before you deploy anything, you need to explore it and test it out. And the challenge with that, from the people that you're testing on is ensuring that you're enabling and not hindering what they're doing. And I think that's been, kind of a key challenge is that, the resource constraints sometimes with the people that you need to do the testing to determine whether, the algorithm is viable for whatever it is they're trying to do. And very often from a business person perspective, and I'll use underwriting as an example. So let's say I'm developing a new segmentation model for underwriting, but we need to, try it out and test. Or, I'm asking them to use some NLP solution to, streamline or review documents. Well, I've just added 2 things to a really complex process already, right? And then you get a lot of pushback from like, maybe this is great, but I don't have time for it. And so it's even being able to select what are the experiments that we think are going to be the most viable, and then how are we protective of our users' time in that process?
Yeah, no, it's an excellent point that highlights, I think, both the comments you're making, Rachel, and Stu's comments around being diligent around what's the operating model that governs this, right? And the reality is I think you can see that there's more than one right answer for that. I mean, you can see it residing in the business, you can see it residing in the IT organization. Some organizations have more dedicated data functions, particularly larger organizations where that resides. So there really is, I think, in a lot of trade-offs as you make those changes. But I think thinking through what the point you're making, Rachel, which is spot on around how most of our AI kind of learning projects come about, which is someone asking the what if question and kind of skunk working a little bit of that and then moving it into the more formalized process, being able to control that as well as control kind of everything once we've got it up and running, and make sure we've got a good wrapper and handle around how things will operate on an ongoing basis, so that we're not kind of managing all of these things with chewing gum and baling wire, but we're actually doing it in a coordinated and organized fashion, and a clear operating model with accountabilities, responsibilities, expectations of each group becomes really critical in that scenario.
Well, and I think to the point, I think also talking about kind of the model ops capability, you don't want to discourage creativity and exploration, right, on any way,
Definitely.
but you need to be able to catch it when it's successful and then do something with it. And, I've been in a lot of different organizations in my career where you've got just incredibly talented data scientists doing pretty amazing things. They build something, but then, no one in technology or the data teams actually knows about it. And then it gets thrown over the wall and, people sort of understandably freak out, right? Because they don't know what to do with it or how to manage it. And the data scientist doesn't want the operational responsibility, right? So there's this balance between how do you give data scientists the platform and the flexibility and the capabilities they need to, work their magic, but then also make that process really easy for the people that have to catch it on the back end.
Yeah.
Definitely.
Yeah, I would say this is such a critically important point. I mean, what we've seen, we need to keep those data scientists as free as possible for ideation, data exploration, all of those things, and use different platforms. In our customer base, for example, all of our customers have a minimum of 3 data science platforms that they're using and are generally expanding that. And that's everything from hyperscale providers like Amazon SageMaker to more dedicated things like Dataiku, Data Robot, automated things. And we just see more and more of what increasingly are called model factories or data science platforms coming in to specific groups because the technology acquisition cost is low. Data scientists tend to get very focused on their area of business and data, and they want the tools that are going to let them have the full spread of creativity. You can imagine then that creates a challenge for how to do enterprise patterns for operation. But the good news is it really is a tractable problem. Like for instance, we have integrations with all the major model factories, but what we found over and over again is that it's really big classes of governance and operating automation that are required, and like maybe a whole division has to go through some regulatory approval, or almost all the models look a little bit like software, so have to go through part of the DevOps process. Integrations with the ServiceNow or the Jira or the Jenkins or the Tableau, because the dashboarding is pretty consistent at the, say, executive level for how what the results are. So the good news is that with a model ops capability in general, it's really tractable to have enterprise patterns that allows the data scientists to use the tools of choice and have the full freedom, but really mitigates the operational risk and really, in the end, unlocks the value of that data science investment kind of consistently, efficiently, and and best of all, fully auditably, which increasingly is where we see a lot of the pain.
Yeah. I wonder if I can take us to some specifics. This is one of the things I think people always feel like great conversation in any panel or webinar, but it's like, I want to hear what's really going on. So I want to ask about that. What are some specific examples or initiatives that you have going on, right now, using AI and ML to create better efficiency, better outcomes, better risk awareness, or whatever the application is, but maybe some firsthand experiences that you touch on some of the challenges we're talking about, the cost, the complexity, the need to not just have it be in one siloed piece of the organization, regardless if that's the right owner for it or not, but thinking about Dan, your 2 sides of it, the building, but then also the actual operation of it. Dan, if we could start with you, some real world things that you guys are doing.
Yeah, so obviously we talked a little bit in the beginning around the claims piece, the straight through processing piece, but as Rachel rightly points out, there's a lot more than just that in the opportunity space. So we've obviously, I would maybe highlight 2 things. One, portfolio optimization is an area where we've been spending a lot of time in building out different models to help us understand how we think about optimizing the portfolio. And so it's helping us to kind of think through what, where is the portfolio? How do we actually move it to a target state, and what are kind of the actions that might be necessary there in order to do that, to inform the underwriting leadership and the group relative to that. The other piece that I would highlight is, and it fits into this model that we've kind of got, whether it's for claims or for underwriting, which is really thinking about how do you take the front end, enable automation of the front end, and inclusive of that is some AI and RPA and other things like that. How do you augment the middle, right? And so some of that includes like straight through processing on simple stuff, but it also includes next best step analysis for claims professionals or for underwriters, so that they can see patterns in the larger data set that they're maybe not seeing with what's on their desk, and then automating the back end. And so in that space, I would highlight probably the work we're doing on automated triage on the front end, right, which is leveraging AI models to kind of red, yellow, green, if you will, risk appetite on incoming submissions. The whole construct there's, when you think about efficiency, the most inefficient work that we possibly can do in an underwriting organization is reviewing submissions that we have no intention of actually underwriting, right? It's like a ton of work for zero probable revenue, profit, etc. And so how do you think about screening that stuff off, right? And being able to use the models to do that. And so we have implemented a process by which we're using the AI to help screen that off, pick up third-party data, internal data, to use that to come up with kind of that scoring. And then from there, then you can start to say, okay, well, how do I think about green and yellow, right? Well, green may be so right up the middle of the fairway that I can think about having a junior underwriter take that on, right? The risk is so well defined, it's so homogenous to the book, it's so in the middle of the appetite that I can think about optimizing my resource and letting them go into that. The yellow may be the ones where we need the more experienced underwriter, right, who is able to suss out the differences that exist between what is a good risk with a little bit of nuances that we have to work our way through versus a bad risk that maybe has some good characteristics that might be fooling somebody, right? And so how do you and then so that puts into an expertise base where we're able to apply our expertise more directly to the real problems, and gives us some insights and ability to kind of think about how we move that through our book in a way that has a more positive impact, not only on efficiency, right, by not doing the work that we're not going to put on the books, but also by thinking about like improving the quality of the risks that we're actually putting on, right? And so that helps us from that standpoint in both of those aspects, from a quality and an efficiency perspective.
Yeah, some great real world usage. Yeah. And it's kind of what the questions are asking about, is getting even more.
Yeah, definitely.
That's valuable. Yeah.
Yeah,
Rachel, you came off mute, so I figured you wanted to jump in.
Yeah, I was gonna build on that because first of all, Dan, I think that's awesome, and we aspire to that kind of triage model. I think in practice that has been fairly challenging, in part because we write global risks and all of our stuff comes in an insane number of languages, right? Maybe 50 or so different languages, and natural language processing hasn't quite caught up in all of them yet. So where we can have some traction in English language documents, it's more challenging to move that and scale that across other languages. Certainly French and German are some of the bigger ones that we're looking at in that process. I think one of the things, and we talked about it a little bit before the call, is coverage transparency. And again, when you're writing large commercial risks, which are very bespoke, there's a lot of customization. What the client wants it may be very unique to their industry or the types of risks that they have in their organization. And so it's identifying what coverage you can offer them that's within your appetite. And I think we all learned in COVID, I think our organization learned especially hard, is that we had a lot of exposures to COVID that didn't emerge until COVID emerged, right? And then you're like, wait, what else is out there, right? What's the next pandemic? And I think that's what all of us from an insurance perspective and a reinsurance perspective are looking at. What else is hiding in the portfolio that maybe isn't a problem today, but could be a problem? And then how do we ask and answer those questions, right? And if you think about a business like ours, which is very document intensive, and I did some work recently where I was surprisingly came to the conclusion that, oh my gosh, we sell legal documents. That's our that's our business, is documents, legal documents, right? It's what a contract is. And so much information is actually locked in that contract document. And so over the past year, we've been building a lot of capability to dive deeper into our existing portfolio and ask what we would call like black swan questions, like, well, what if this, right? And, go search through that and find out some of those answers. So giving that more ability to kind of ask and answer questions of your book. The problem is that you're already doing analysis on exposures you already have, right? Like, okay, well, if that event happened, too bad, because you've already written that risk. Right. Now you know what the magnitude might be of it, and you can maybe non-renew that or change your coverage in the next year, but it doesn't stop what you have on your plate today. So I think the next part of that is, how do you move that process forward so that you can, as that information comes into the door, better do that assessment and proactively look at mitigating those risks before they actually hit your portfolio.
Yeah. I appreciate the use case. That's not just, I think people presume it's for outward facing things or things that came in from the outside in respect of how we rate a policy, or Dan, great examples on triage of submissions, also thinking about triage of claims, or, assignment to the right person, or flagging it for severity or potential jumper claims, those sorts of things, all incredibly valuable. But Rachel, you're talking about something that's been very front and center for a lot of carriers in the past year or so. And go back to some of the major storm activity we've had, is what's our exposure here? And yeah, it's too late. But even that effort, I can think of Harvey, Irva, and Maria when we were scrambling, like, we need to size this, we need to size it now, while we're also dealing with this influx of claims, for the largest, like back-to-back largest Atlantic windstorms we had ever had. That's not really the time to figure out the total magnitude and how to do it. You want to be really all hands down on exactly what's going on with the claims. So to size those risks, maybe there's reinsurance solutions you can look to, preparedness. Maybe it's about staffing for things, putting in early warning signs so you see, is it materializing or not? Because we went in eyes wide open, instead of, all of a sudden we have this business interruption question that we hadn't even contemplated, in the pandemic, as an example.
Well, and even being able to reserve more accurately, right? Even if you have the risk on your books, can you get that, in order, so that you have a sense of what your liabilities are? Because, the market wants to know that, the parent company wants to know that. And it's key to how we actually move forward in our business.
Yeah. Stu, I don't know if you had anything to add before I jumped into the next question. I didn't want to not offer you a chance on this one.
No. I mean, I think it's really important to listen to Rachel and Dan in terms of what's happening on the practitioner level. And I would just say it's been our experience, we've been doing this for 5 years, that there really is a growing group of practitioners. Not everyone's as mature in their journey as QBE. And again, I direct you back to kind of the public case studies that are coming out now. But I think as the practitioners continue to network in events like this, I think it will be clear to everybody that real things are happening, and kind of the details are there. And, that I think is a testament to how impactful AI is just how much impact it's having on the whole industry as a whole in a very concrete way.
Yeah. A really good question came in that, Stu, I want to start with you on, so you can keep yourself off mute, given the breadth of visibility you have. This is from Benjamin Auerbach, and I think it's one a lot of people wrestle with, and we've sort of been dancing around this, is what's the right place, and you put in quotes, what's the right place for AI and ML in your organization or operations? How do you identify that? And Rachel, you had talked about the ROI question. So, is it ROI? Is it about something else? Dan, Stu, I should just start with you. How are you seeing people figure out where do we need to put something in place, deploy first? How are they prioritizing?
Let me try to explain exactly how almost all of our journeys with our customers have started. There's been a forward-thinking group that has used AI and ML. In the case, we talk a lot about straight-through claim processing because we can talk about it publicly. But somewhere there's a forward-thinking group that's really done all the homework to both make very valuable models and actually, have the will at the executive level to put them into business and take the risk and be able to do that. But then what happens, and we've seen this over and over again, is that group tends to not be as well versed in the enterprise systems. There also may be many manual processes, like even within the business context, that assess validation, for example, or how do you measure good? Or how do you say that this actually had a business impact at the top line? What kind of executive dashboard is? And usually the group that's very innovative with the models is not so aware of both technical and business governance aspects of the enterprise and how to get the model through that into business. And so that becomes the first kind of journey for a kind of a ModelOps capability, which is designed to do that. And what we've seen over and over again is that as more and more business units come online with models that are real in terms of impacting the business, that some combination of the CIO, COO, chief risk officer, those are the operating functions. Those are the functions at the enterprise level that know how to do things day in, day out with enterprise visibility, that they tend to coalesce to be the owners. And then model operators, for example, can be up-leveled IT operators, up-leveled risk operators, right? People who come in every day and can answer simple questions. How many models are in production? How well are they doing in their business with related to top line? What's the total cost of ownership for these models? Are there any problems going on with these models, technical, data science, business, or otherwise? And can I have a full audit of everything that happened with this model at a touch of a button? And so that tends to be owned by an operating group of some kind, COO, chief risk type officer, or CIO, or some combination.
Okay, so that gives us some guidance on who at least should be at the table thinking through this. We turn to the carrier side. What are some of the real world ways that you see organizations sorting this out? Dan, if you want to start things off.
Yeah, well, yeah, I think what I heard in the question that was asked maybe was where does it apply, right? And I guess part of my answer there is where doesn't it apply, right? I know that's a bit of a flip answer and maybe not, but the reality is there's opportunity for us to apply AI. We often think about AI and machine learning and a lot of the tools that are out there in context of our core business, but the reality situation is there's opportunities for us to use it in terms of how we're understanding our employee population, right? And what's motivating them. There's opportunities to think about how it is that we're understanding a lot of our internal activities. Rachel talked about, looking at exposures and contract languages. There are so many of those opportunities, right? I think what for us and for me, where we generally have started is it always starts with somebody asking an interesting question, right? And a lot of it, and I love our data science folks, because at the end of the day, they really just want to go do interesting work and creative stuff, and they give them the best we can do is give them this big set of data, and they go say, oh, did you know you could figure this out, and you pair that with curious and smart business folks who are saying, I wonder about this, or what could we find out about that? And if you put those two together, that's just like that's dynamite, right? Because what winds up happening is you've got somebody who's asking your question like, maybe even it could be, again, like I say, and I'll use an internal example because I think we sometimes over-index to external examples, but what are some of the drivers of employee turnover, right? Certainly we think about the cost of employee turnover, losing some of our top talent. Talent is important for the insurance industry. So as you apply, and we've in past lives, I've seen, we've been able to identify key activities that individuals engage in that are predictors of their ability to have a longer tenure in the organization. Being able to identify those, flag those, encourage our top performers to participate in those has yielded results internally. So again, I think the answer is it's everywhere, and it really comes about by being curious, creative, asking interesting what if questions, and having data scientists who have big sets of data and a lot of ability to go ask interesting questions, come up with ideas on their own, and then work together with these folks. That's my sense.
Yeah, so it's collaborative.
I'm going to give you a counterpoint.
Go for it.
So it's interesting, right? Because we have data scientists, as many organizations do, in different pockets of the organization. And, one of the challenges, right, and I've seen this not just in our organization, but other organizations, is that in some ways, like, you want to encourage, but also rein in creativity, because your organization only has so much capacity to ask, answer, and do something with, the output of all of those questions, right? And I think in the past, there was maybe a little bit of a free for all, or you have people focusing on things that maybe aren't the things that are a priority for the organization. And over the past couple of years, what we've done is kind of coordinate around themes. So we've got some innovation themes. There's 3 of them. And so the data scientists who are, charged with kind of doing more exploration work are working in the themes. And therefore we have some targeted innovation, and then it makes it easier to make a business case because it's aligned with an organizational priority. That doesn't mean that there's not room for, outside innovation and exploration. It's just not the core focus. I think the other piece of it is a maturity question around, what in your AI, machine learning, predictive analytic portfolio is business as usual. Right. And so in our organization, we have a lot of, we've been, doing machine learning models and risk segmentation and pricing for years. Right. And so those are a key component of, our pricing tools are part of business as usual. Right. And so there's a lot more rigor and governance around the model maintenance, governance, and deployment of those models. Right. Whereas on the other side with the exploration, some of that stuff could just be throwaway. So again, we want to kind of do it in a managed, coordinated way so that we have a good sense of what we're doing and how it works in our business.
Yeah, and I'd love to bridge those 2 perspectives, Bryan, with our experience. On the one hand, Dan's absolutely right. What we've seen across the board is just so many more groups embracing AI initiatives and being thoughtful about that. And the way we experience that is we're asked to integrate with more data science platforms. We're asked to be able to handle more different types of models, be able to have different types of life cycles. So we really see that. And what Rachel is saying as well, which is, but we're also seeing these data science these are real initiatives, with real budgeting at the very top level. And it's not cheap, as everyone knows. And so to be held accountable, in terms of the top line. So again, kind of concretely, we've been asked to integrate with Tableau or Power BI, business tools that you could say, hey, we gave that group, X millions of dollars. And the top line really didn't move, right? We may think differently about how we allocate budget next year. Or, hey, wow, that's having a big impact. Maybe the AI is going. So this kind of visibility in terms of the return on these investments. And what we see over and over again is the concrete asset is the models. If you give a team X millions of dollars in data scientists to play around and experiment creatively, and they don't actually develop any models that are going to make real decisions and have an impact, that's just a thing to note for the next budgeting cycle. So we've really seen that maturity change in the last 2.5 years, and it's quite striking, actually.
Dan, you were going to jump in before.
Yeah, no, I was just going to say, I think both Stu and Rachel are right. I mean, there is, and I really like the point Rachel's making around kind of the BAU versus the kind of the exploratory piece, right? And I think certainly for in my comments was more around the exploratory side, and I think as we talked earlier, just having an operating model, right? And part of that operating model has to be around transparency, visibility, and prioritization of what the exploration is, right? And so whether you decide to go down the path of creating 3 themes that people work in, or whether you have a little more open model for folks to kind of explore, there still has to be an integration to that operating model, visibility, transparency into what's being worked upon, and then prioritization of which ones you're going to actually invest in and move forward, right? And I think that gets back to Stu's point, which at the end of the day, if we're not producing models that have value to the business in some form, then it becomes a flag for the next budget cycle, right? And so I think there's that mix and hybrid between the two, which is, I think, different approaches depending on how you like to move forward.
Yeah. We have another question on changes to our historical data. So when you're training models on historical data and then regulations change, or I don't know, we have a major shock like what we've had in the past, 16 months, where maybe the relevancy of that data or the accuracy to the current state of affairs is no longer valid, or weather patterns are changing, and so we're seeing more cat activity, whatever it may be. How do you handle that where your historical data that you would normally use to train, or you have used to train, now you're looking at it as less accurate guidance on the current state of affairs? Is there a way to deal with that?
So I can jump in there a little bit because it's a big part of what drives adoption of ModelOp Center, actually. So as I mentioned, we talked about the models being the kind of the organizing principle for everything. And it starts with the modelers who know they actually analyze their historical pile of data and understand what the kind of tolerances are for the model to make decisions. And if new production data that comes in that is used for scoring and inference is well out of the tolerance range that was used to create the model, that has to be flagged in some way. So in today, there's a lot of jargon still, because you have these mixing streams of people who've been dealing with models for a long time, like in risk management places, and people who've been coming out of school with data science degrees, and they have different terms. So there's data drift, concept drift. So my first thing is don't get marred into that. There's a lot of fuzzy language, and it's not, super clear what each label means. But in general, the model has a set of operating constraints. And those need to be encoded in some sort of a way. And again, kind of the second pillar after an inventory of a model ops capability is some sort of process automation. So like in ModelOp Center, it's very easy to put in the decision tables. It's very easy to put in all of the constraints with the model. And then those get tested and validated when prior to, say, retraining. So is the new pile of data that is built up that'll now be used to retrain the weights and coefficients or whatever the algorithm requires, is it still within the bounds that the original algorithm designer hoped it to be? Or, like I said, when we're doing production scoring and inferences, are we in those bounds? So really the data scientists are responsible for understanding the statistical aspects of those things, but they need to be encoded on the operational side in some meaningful way. And otherwise, and what we've seen over and over again, without concrete definitions, and you can look at, say, this is the test we're going to do. And if it fails, we're not going to retrain. We're going to actually send a ServiceNow ticket and someone has to deal with it. And we're going to take the model out of production scoring, for example, may be important. It may be the case that, no, we're going to send a yellow flag. We're going to keep retraining. We're going to keep going because the business impact of not scoring at all is worse than having the model, if it's a little off, let's start dealing with that, but let's keep the model in or keep the old model in or whatever. So being able to articulate the response to something being outside of operating capabilities and automate that response, we found is critical to be able to scale and govern these AI initiatives kind of in the large.
Yeah, any examples from the two carriers here where you faced this because of shifts in the outside environment, regulatory change, et cetera?
I think there's kind of two components to this. One is the piece, there's another monitoring piece, which is your model actually being used? Right. So sometimes, especially if you've got, augmented, we're not straight through processing, right? We're augmented processing. And, underwriters could be ignoring your model, right? If you have a risk segmentation model, how do you know if they're actually using it is one huge metric. That can also be an indicator that you've got model drift. If your underwriters don't trust it and they're seeing things like, hey, this is my top risk, why is it falling in a bottom quartile? That can be a whole different discussion. But I think to that point that, Stu is making, having the reporting on the back end to kind of show the changes over time, right? And, being able to monitor that a little bit more systemically. Plus, again, in the large commercial space, you may have shock events, right, that are going to necessitate like, oh, wow, we just had a giant loss because of a hurricane we didn't expect or something, right? We better go look at X, Y, and Z. But having that traceability so that you know which models to look at is really important.
Yeah. Well, it's a great point, and it's a point we're going to end on, that Alex is back. So thank you to the panel. Really good conversation. I love that we got real world on this, some real examples as QBE, AXA XL, live with these things. And Stu, your experience from ModelOp looking across a number of different situations, really invaluable. So thank you to the panel today.
Thank you.
Thanks.
Thank
everyone.
you. Thanks, Bryan. Thank you, Rachel, Dan, and Stu for joining us. I'd encourage anyone with, I saw we had a lot of questions submitted, so anyone that wants to, take the conversation further, to connect with all of the panelists today on the networking platform, visit the ModelOp booth and download any materials that they have on there. It's really important stuff. Up next, we have the future of commercial insurance from Matteo Carbone. And then that's followed by an interesting conversation we had with Peter Caminiti from Zurich, North America, around how we prepare to handle losses caused by pandemics in the future, and kind of a look a bit more in depth at how they are looking to develop a federal pandemic solution.